Hello everyone, welcome to the ichimokujcharts.com daily analysis for the Aussie dollar US dollar FX for Wednesday, May the 2nd, 2012. Well, a continuation of the trend to the downside today, and we have a candle that's made a lower high and a lower low. The candle that we're analysing is the second last here on the chart. The final candle, the largish black body candle, is currently developing and certainly looks very bearish at the moment. But that candle is not complete, so we can't analyse that at the moment. So the candle that we're analysing here is a doji type candle, a significant candle with a largish shadow on the bottom, which tested below the 103 level, very important level 103, and will be important for this market moving forward. We have had the market close up towards the highs, basically between the midpoint level and the high, and that tells us that control of the trading day has passed from the sellers to the buyers. Previously the sellers were in control and had very strong control, made a lot of net bearish progress. Today the sellers have made no net bearish progress. By the same token, the buyers didn't make any net bearish progress between the open and the close, but the buyers were able to take control of the market and close the market up between the high and the midpoint level. So that could suggest potential for a change of trend, although the way the current market is developing, it doesn't look as though that will happen. We have seen, as I've mentioned, this large shadow on the bottom represents strong upside price rejection, but also some downside price rejection, only a minimal amount, as the market tested to the Kijun-sen, and that has held as resistance for this market. Now, looking at in bigger picture terms, we had the market trending down very strongly in terms of the second time frame, making a series of lower peaks and lower troughs after the breakout from this megaphone type pattern that I highlighted previously. We then had the market making a higher trough and then a higher peak to change the trend in the second time frame to the upside. So in big picture terms, if the market can find support down around these levels and trade up and take out the previous peak here, that will be confirmation of that trend in the second time frame to the upside. We do have that trend established, but that will be a strong signal that the bears have lost the very strong commitment that they had in a very big picture time frame. But at the moment, in this shorter time frame, the bears certainly are in control, with the market trending down, with the market making lower highs and lower lows in that first time frame. But looking at the boundaries that I've drawn here, this is some sort of a flag type pattern. Here we have the prior trend, a consolidation, even though the trend has changed to the upside, but a consolidation all the same. A fairly large area of consolidation, however, so not a perfect flag type pattern, where you'd probably like a tighter area for this consolidation, but very similar to a flag type pattern. Flag patterns tend to be continuation patterns, and you act on the breakout below the top or the bottom boundaries, in this case the bottom boundary, and the target for these patterns is the extent of the prior trend leading into the pattern projected out from the breakout to the downside. So technically, if we do have a breakout down below this lower boundary of this flag type pattern, we could see this market trading substantially lower, basically down to roughly about the 98-97 cent area. There is, however, a lot of strong support down below where the market's trading at the moment, and the most important one would be this 102.18 level. So any signal taken from that breakout, really you would need to consider whether the market will hold up at these support levels. 102 is the first one, 101.44 is important, then down around the round number $1 and the 100.43 level. In terms of Ichimoku, the market is trading below the cloud, and that is supporting any breakout from that we may have below this flag type pattern, so that could be significant. But in long term, in big picture terms, the market is bearish by trading below the cloud, but also bearish by trading below the Kijun Sen and the Tenkan Sen. So that's quite significant that the market is once again trading below there and has been for the previous 2 trading days. The Kijun Sen looks like it's turning flat, and that will attract price action, so we do need to be aware of that. That if this bearishness that we're seeing currently developing in the market doesn't continue, the market may retrace back up to the Kijun Sen, which is trading at 103.60. So we have a bearish market in all 3 time frames. In bigger picture terms, the implication of this flag are quite important, and then a bearish close and breakout down below could see the market trading substantially lower. But at the moment, in terms of the short-term dynamics, with the candle that has just closed, we don't have the sellers supporting the trend to the downside. The buyers have taken control in a moderate way, but the current candle as it's developing is quite bearish, testing at the below the 103 level. If we do see the market come off that level to the upside, then we could see it retrace back up towards the Kijun Sen around 103, and then even to the 103.77 level.